So on today's episode, we're going to talk about how to fund e-commerce growth without giving up control. It's a great episode. You do not want to miss it. Stay tuned. Hello, 2Xers. Welcome to the 2X e-commerce podcast. I'm your host, Kunle Campbell, and this is the e-commerce podcast dedicated to rapid growth and direct-to-consumer selling space. So if you work in marketing at an e-commerce business or a founder, I'm going to help you sell more directly to your customers. And each week, the way we do it is we interview an expert, a founder at a direct-to-consumer e-commerce business, or a representative from a best-in-class e-commerce SaaS solution focused on helping you improve e-commerce growth metrics such as conversions, average order value, repeat customers, your audience size, and ultimately sales. The remit is to help you sell more sustainably. Now, on today's episode, it's been a long time coming, and I've been really looking forward to having today's guest on the podcast, and that's because I am very much aware of his company. He founded Uncapped, which is Europe's biggest revenue-based financing firm. So, think about, working class financing. This is the biggest. They're called Uncapped. I've spoken to a few people in their company in the past, and it is an absolute pleasure having a co-founder and CEO of Uncapped on the 2X e-commerce podcast. His name is Asher Ismail, and I'm just going to read a bit from his bio so you get some context as to who he is. He is the co-founder of Uncapped, the fastest and most affordable way for founders to fund marketing and inventory or even hiring. He's a serial entrepreneur and business scaling expert that has raised over $100 million in capital for companies from angels, VCs, crowdfunding, and banks. Along the way, Asher experienced the uncertainty of bootstrapping, the risk associated with debt, and then the frustrations of repeatedly giving away more equity than he was comfortable with. And this is probably the why he founded, Uncapped. They're based out in London. He's a Canadian, native of Canada, world traveler. Asher, it's an absolute pleasure having you.
Hey, thanks so much for having me.
Brilliant. Probably not done you sufficient justice in the intro. Could you take a minute or two to just introduce yourself, and then we'll take it from there?
Yeah, sure thing. I guess my background is in startups. This is the third business that I've started over the years. And I think the biggest problem I always had was getting the funding that I needed. And I think working with e-commerce founders, I've seen just, how they've struggled too. So it's really a dream to get to work on Uncapped. Every day I get to help other entrepreneurs solve this problem. Our first customers were also my friends. So it's been really nice to create something that is actually fast and fair and friendly and something that you want to give to a mate. And it's been amazing to see how some of them have grown as well. We're now in 22 countries, including the US, UK, Germany, Spain. Our business has been growing exponentially, deploying 100 millions of capital. And we now fund more businesses in a day than a typical e-commerce business would be funded by VCs in a year. Incredible stuff. I want to get your backstory, Asher. You're based in London. You're Canadian. How did it all start? How did you move to the UK? What did you do prior? You said this is your third startup. Could you just take us through as far back as you can, as to how you started out Uncapped? Yeah, absolutely. Well, I guess, Uncapped is born out of the frustrations I faced when launching my first business. I started my first business in 2003, and I was young and I was just trying to raise 100K. And I probably had 100 meetings and 100 no's. And, I didn't want to take financing from the banks because they all wanted personal guarantees. And venture capital, it wasn't ideal either because I didn't have a track record. I didn't have connections or some warm introduction. And so I just repeatedly missed out on growth opportunities. And, later on, I would go on to, think about building my second company. And by that time, I thought I had it all figured out. And I ended up raising millions in venture capital money. But then I got terribly diluted. And I started to realize that the options for me were really limited. And it was depressing to think that I could work so hard and own so little of my company. And what I noticed is that it wasn't just me. Growing businesses, they're often left to choose between either raising costly venture capital or burdening themselves with traditional debt. And so I thought, there must be a better way. And actually, I ended up meeting my co-founder, Piotr, and he came from this VC background. And I think the two of us together, coming from these different sides of the problem, we were able to work together and really start bringing this more
fair alternative to funding, first to Europe and now to North America. And since we've given over 150 million funding to businesses that have gone on to create a ton of different jobs and opportunities, which is really inspiring. But we've also helped the founders of those businesses just own more of their businesses and save millions in dilution.
Okay, Asher, could you explain how Uncapped works?
Yeah, Uncapped is a new way for founders to fund their growth. So we provide equity and interest-free investments from 10K up to £5 million. And we charge a flat fee of 6% on the capital we provide. Businesses only repay the capital as they make revenue with no set repayment date, no compounding interest, equity, or personal guarantees. There's no pitching or business plans or coffees, which means that you can really get back to growing your company. And critically, because repayments are tied to your revenue, if the business slows down, the founder isn't caught out. The repayments just also slow down. So we believe it's the most affordable, flexible type of financing available to growth companies.
Interesting. So how do you get revenue data from merchants?
Well, what we do is we connect to the data sources that the business already uses to run. So, for example, we'd connect to your Shopify account or your Google AdWords or your accounting software. We have 100 different ways that we can analyze your business. And what this means is that we're able to make a data-driven decision within 24 hours. There's also, simplifies the whole process in terms of not needing to do deep due diligence because we have this live data that can really drive a more fair and quick decision.
Interesting. So it's a 6% taken on my daily take-ins or on weekly take-ins?
So 6% is the total fee that you provide. So for example, say you wanted 100K to spend on marketing, we'd take back a fixed portion of your daily revenue. That might be like 5 or 10% until we get 106K back. So we don't take any other fees. You're just paying that 6% flat fee.
And terms are typically how many months?
So there's no set repayment date. It really depends on the revenue growth that you have. Typically, our customers will pay us within 6 to 12 months. Sometimes, we get that forecast wrong and we end up, having a company pay us back sooner. But that also means that business has probably grown a lot faster than we both thought. And on the flip side, sometimes we get it wrong the other way and that business takes a little bit longer to pay. And so the beauty of this model is that, it has that fully flexible approach. So therefore, you don't have raising capital actually become a cash flow problem in itself.
Incredible. So you were very cognizant of the problem because you're on the other side essentially, and there's no one better suited really than someone who's really felt that pain point. Let's start out with, so you're a Canadian native. Where in Canada did you grow up?
So I'm originally from Toronto. And then since then I've spent some time in New York and in San Francisco before landing here. But yeah, London is now home.
London is home. Okay. How long have you been in the UK for?
Well, it's funny. I actually came here originally to work for Skype and to do a little project for one of my clients became the CEO of Skype. So I ended up doing this little project, which was supposed to be 12 months and it turned around to be 12 years. So yeah, definitely a long time now.
Incredible. And then, so from my understanding, Uncapped was founded in London.
Yeah, that's right. But we've also been kind of international from the start. So, we're actually a fully remote company. So we have a lot of our team members in London, but right from the beginning, we had a team that's in Warsaw. And now we have team members that are based in 12 different countries. So it's been really incredible to be able to build a business at a time where, that kind of working is actually possible.
How do you manage a business with a distributed team around the world?
Well, I think at first we tried to manage the team probably in the same way that you would manage a team that's in an office, and it failed incredibly. And I think the shift that we made is we realized that we had to change the tools that we work with and think about managing that way. But we also had to change, the permanence of, how we communicated. So, we moved from a world where instead, we used to have one-off meetings to now recording everything. We shifted away from thinking about emails to thinking about how do we create, permanent artifacts that people who are newly joining the company can actually access and start to really document everything in Notion. And actually, it's become now a competitive advantage for us because we're able to, onboard people so much quicker than we could before.
Yeah, and Notion is one of the, and it's one of the most innovative apps out there from a SOAPs, standard operations, procedure standpoint. It's incredible. Notion as a platform. Okay, so you started it out. So how old is Uncapped?
So we're about 2 years old now. So it's gone by incredibly fast, probably because of how quickly we've grown. So probably in December we had 10 people. Now we're about 70 people, spread across all those different countries. So a lot has happened really quickly. And I think driven just by the demand and interest for founders, needing new forms of capital.
Mm-hmm. It's brilliant timing. 2 years ago, 2019, found in there, and then the pandemic happened. And then there's now the post-pandemic, era right now. So could you paint us a picture of what the e-commerce landscape looked like in 2019? Clearly, there was a problem across the board in regard to access to working capital. So what key characteristics did you identify, as founders in the e-commerce space that you thought, okay, Uncapped can solve this problem?
Well, absolutely. I think, in 2019, probably the challenge for an e-commerce founder looking for working capital was first most that they have really tough terms from their suppliers, right? So that makes an upfront challenge of like starting up an e-commerce business. But another challenge is seasonality, right? The typical e-commerce business goes through big waves of demand. And finally, if you do get an e-commerce business that's working, you can scale it incredibly fast, right? Because an e-commerce business that has a good return on ad spend can take an investment and with a small team actually grow a huge business. And we've seen that with many of our customers is that, they have a 5-person team who's actually running, a multi-million e-commerce company. But of course, that's like a unique challenge. And, banks don't necessarily understand that. E-commerce investors on the equity side as well, we're looking at this, but also thinking about it with a lot of skepticism. I think there's been some, cases where folks have seen, companies even go public in e-commerce space and actually have, less than stellar results at the end outcome. And so I think in this environment, those founders just need a new format of funding. And that's kind of what we look to solve. The other trend I would mention, I think, is that there's just now, looking today, there's a much higher uptick of e-commerce companies that are raising money. With tools like Shopify, the barriers to entry are a lot lower, which makes it, easy to set up your e-commerce shop. But the new challenge is, how do you find a unique space in that marketplace? At the same time, I'd say the supply from investors is also at a peak. And as a result, you're seeing valuations that are starting to look more like SaaS companies. Investors are now pitching multiples that are like 12x revenue. So I think it's, an exciting time, but there's some challenges as well.
Super interesting. And what sort of businesses initially at the time in 2019 really appealed to your team? Were you selective at the time in terms of company size, in terms of revenue base or GMV, or were you just testing the waters and just testing all sorts of layers in the middle market and in middle market e-commerce?
Yeah. So, in the early days of building this business, we had to be, a bit more careful about who we were working with. But, we've actually now been able to be a bit smarter and sharpen our understanding of e-commerce's businesses and expanded the range of companies that we can work with. So now I would say, Uncapped is great for you if you're doing at least 10K of monthly sales. You've been around for around 6 months and, you have positive unit economics. But we've seen the model actually work for a real variety of businesses. So whether you are bootstrapped or you've raised some equity or gone to even venture capital, we've been able to find ways to support those businesses to grow to that next level.
This is a slightly sort of, off question, which is like, if you're to track back in 2019, obviously at the time, the number of companies you could see that you knew most of the companies, on your books. Are there any growth stories? You don't need to mention names that have just impressed you. So obviously you have access to a lot of these companies, data. You're plugged into their Shopify, which we'll talk about much later. But do you have any stories? What have your best in class customers done? Have they utilized capital they've raised from you to really accelerate, their growth and just make a meaningful impact in the, in the sub industries they serve?
Oh, absolutely. I can give you tons of different examples. I mean, one of our first customers was a sustainable fashion brand called Headwind. And I think just like so many e-commerce entrepreneurs that are working in fashion, they were juggling their cash between marketing or inventory. So basically they would have to wait until the current season would sell so they could reinvest the returns in the next. And I see you nodding, and I think you've probably heard this story many times before, right? It just limits their growth. And, the founders of Headwind, Alex and Anna, they are incredibly savvy founders. They both came from finance backgrounds. So they looked at all the options. They looked at VC, they looked at venture debt, but they wanted something more affordable. And, they signed up with Uncapped for a $50K advance at the end of 2019. And they used those funds to increase their inventory. And with this new funding, they saw in, Q1, revenues grew 11,000% compared to the previous year. And it just shows like what's possible, right? For an e-commerce business, when they actually have the access to the capital that they need, if they have a strong business, they can unlock it and see incredible growth. So those are the stories like we love to talk about.
Super, super interesting. So what kind of, from a unit economics standpoint, when do you know you're onto something? I'm talking like from a point of view of a, just going to market, one, and an existing e-commerce business launching new products and saying, okay, there is potential here. We just need capital to ramp either, inventory up or to ramp our marketing spend up. What do you want to see? You did mention a brand doing 3x ROAS, and then, obviously with 6% payback, they still keep, 2.94, ROAS. So do you want to break down that unit economics?
So let me give you a little bit example of what we were talking about earlier. So, the idea that if you are a business who does have positive unit economics, so you have a good return on ad spend, you see that in, positive gross margins, but also positive contribution margins, you're clearly onto something. We also see that when you've hit a certain level of scale. So, I mentioned like 10K as being kind of our starting point, because, when you're doing 10K of monthly sales, you've probably gotten to a place where now you've built a business that, actually has some real drive in it, can be sustainable and predictable and repeatable. And, if you are a business where you're getting that good return on ad spend, like you mentioned, getting a 3x, our capital, has a flat 6% fee. So if you are able to then now get an additional customer, rather than miss out on the opportunity completely, you'd still be getting 2.94x. So, that is a bet that an e-commerce founder should take every time. And so I think that's the thing that often people are weighing up, because when they're looking at other options for funding, they're considering options that are going to take them months to go and get. And that really means that they actually just miss out on that critical moment when they could be accelerating their growth, increasing their revenues, and increasing the value of their business.
Interesting. What about cash conversion cycles? What's your take on, on cash conversion cycles, and how are customers of yours actually reducing cash conversion cycles with working capital?
Well, I mean, this is the fundamental challenge I think that an e-commerce business has, right? Is how quickly can you convert that cash, or how quickly can you convert your inventory or marketing into cash? Invest in the things that are going to drive that to move faster. And part of that is about being smart about where you allocate your capital, right? And thinking about, are you investing in the SKUs? They're going to get you the returns and get you that cycle. But there's a question about like, how do you fund your business overall, right? And there's some parts of your business that are repeatable and predictable. And for those, what we're saying is, rather than use super expensive equity or, other options that are consistent for, doing more R&D, which has long cash cycles, for those ones where you're investing in something that's short-term, use a more efficient source of capital, which might be, something like Uncapped. We're using revenue-based finance. For example, a key category for that is marketing, because, if you put £1 into Facebook and you're going to get those £3 back, it doesn't make sense to then give away really costly equity in order to fund that.
Makes sense. Speaking of your your reach. You're a multinational, company with customers around the world. Where are you seeing a lot of activity from your data across, particularly in the last 11 months? Going back and just tracking back to 2021, where you seeing a lot of activity from Uncapped's perspective?
Well, I think one of the beautiful things about this funding model is that it doesn't depend on an in-person meeting or a coffee or a pitch. And, if you think about what you were saying earlier about looking back at 2019, how fundraising was based, so much of it was centered around these hubs, right? And founders who were in those major hubs like the Valley, New York, or London, raising capital for them was, much easier. But fundraising now, of course, has been compressed, into 30-minute chunks of virtual Zoom meetings. In our case, we have a fully online process, so location is totally irrelevant. And the result is that we have much more of a democratization of capital. And so for us, we're now seeing founders across the globe be able to access capital. Some of our popular areas still, you see a lot of e-commerce businesses based in the UK, but we've also been excited to see tremendous growth in Germany and Spain and now America.
Interesting, very, very interesting. So what data points? So this question is probably on behalf of founders listening, thinking, okay, how do I sort of prepare myself beyond the 10,000 a month? Is your data point only 10,000 a month? How many months of 10? How many months would you need of consistency? Would you need to secure funding with Uncapped? And does Uncapped look at any other data points to sort of make a decision on giving finance?
Yeah, so those key ones are the ones you mentioned. Certainly, we're looking for businesses that have been around, made a trading history for 6 months. It doesn't necessarily have to be that they've consistently had 10K for 6 months, but they've been, on that journey and we've seen them growing. And the idea there is just to see, is this business building something that's repeatable and predictable? Is it a business that we believe has like potential to scale? The way we work is really different, I think, from way a traditional funder would go and understand a business. What we do is we connect the data sources that the business already uses to run. So whether that is, their Shopify account or their Google Ads or their accounting software. And we're able to use that and build this 360-degree view of the business. And off the back of that, make a data-driven decision in 24 hours. So it's a really different funding experience than, if you've gone to try and sit in the bank branch and try to talk about a business plan, or if you tried to pitch to, VCs and go to endless meetings without necessarily knowing what's happening. It's a different way of thinking, and you get your answers really quick.
Yeah, it's unbiased. It's data driven, and the numbers speak for themselves, really. Right. I really wanted to ask you this question, which got to do with the fact that you were founded in 2019, and then in March of 2020, COVID happened. There was a mass acceleration of e-commerce in 2020, and there are now challenges in 2021. Do you want to paint us a picture? Because this is why I love having SaaS providers and finance providers such as yourselves on the show, because we're not talking from one perspective. It's not qualitative, it's really quantitative. So you have a massive data set. And from your perspective, do you want to just paint a picture of what entrepreneurs have been going through from your data in 2020 as compared to 2021, and also just a prediction for Black Friday this 2021, this quarter four, shall I say, in 2021?
Well, it's been a tough time for many e-commerce founders. On one hand, of course, there's been continued growth, and what's I think positive that we've seen is a lot of the growth we saw in the pandemic. I think there were questions about would it be sustained. And I think actually we've seen positive signs that, the behaviors that we now adapted to in the pandemic of more people shopping online hasn't gone away. But on the flip side, we've had some other challenges. I think the global supply chain challenges that have occurred have really impacted so many founders. One of my customers was, talking about the challenge they're facing where they have a shipment container that is just stuck in, on its way on the ocean, on its way from China. And that makes it incredibly tough for founders to be able to actually service their customers in the way they want to. I think going forward in our prediction for Black Friday, I think we're going to see some brands do incredibly well and see really huge growth versus the previous period. We're going to see other brands that perhaps didn't get as lucky, probably have a bit of a setback, hopefully make it through and, hopefully learn some lessons about, thinking about their planning, balancing their inventory out more so, and also thinking about how to capitalize themselves so they can take advantage of those opportunities. There's been some great wins as well. I've heard of founders where they've kind of been ahead of some of these worries and they've taken that as an opportunity to go and, order those larger quantities from their suppliers, secure that discount and, offset any kind of fees that they would have been charged by, say services to provide them capital and actually just come out a winner. So hopefully there's going to be more of those stories and we'll see more of that in the next quarter as well.
Well, we're hoping to see that too. All right, Asher, it's been an absolute pleasure, having you on the 2x e-commerce podcast show. But before I let you go, we have a lightning round where I ask you 5 to 6 questions, and if you could use a single sentence to answer them, it'd be brilliant.
I'll do my best.
All right, okay. What advice would you give to yourself 5 years ago?
I think the first one is probably to be less afraid of what other people think. I think, a founder's greatest fear is always failure. But, I think we see that because it's always a success, what people celebrate. But being an entrepreneur is all about embracing that risk and, challenging yourself to do something that no one has done before.
Mm-hmm. Are you a morning person?
I used to be when I was younger. I feel like I was so much of a late night guy. I'd be coding into the evening and just loving that. But I think I've really had a shift where now I'm really, up in the early, really in the morning, giving myself some time to think. And I think as a founder, that's incredibly helpful because, in startups, fires never cease to burn. So if you can take those first few hours in the morning to reflect and actually get some things done for yourself, your business is off to a much better start.
Absolutely. And there are tons of people waiting on you later after that early time in the morning you have for yourself. So what's your daily morning routine like?
Well, I think probably have a different set of days depending on what's happening in life. But, I think one of my favorite things to do is, start my day with by doing some reading, doing something that is outside of my normal world and just getting a chance to spend some time reflecting and thinking about, the broader business. That's usually how I start with a cup of coffee.
Mm-hmm. What's been your best mistake to date? By that, I mean a setback that's given you the biggest feedback.
Well, I think I really experienced some big challenges when I was raising money at the beginning, of my journey, and I probably got really screwed over in some cases too. But I think those lessons about really forced me to understand the world of capital in a better way, and probably led me down this path. I probably wouldn't have founded Uncapped had I not actually experienced some of those challenges and seen that there could be a better way.
Incredible. Final question. What book are you currently reading or listening to?
I think a book I recently came across was called Building a Story Brand by Donald Miller. And it's a fantastic book about just that realization that I think as founders, so much of what we do is can be very centered on product. And, really, I think the way to build a successful business is also about the story that you build. And probably a lesson I have is that, a first-time founder focus on product, second-time founder focus on distribution. And so I think that book just kind of brings that home.
Mm-hmm. Incredible conversation. I could just let this stretch all day long because there are lots of insights. So for people who want to find out more about Uncapped, their website URL is weareuncapped.com. That's WeareUncapped.com. Asher, are you active on social media, or you don't have time for social media?
Absolutely. Probably I'm most active on LinkedIn, and actually every week I share insights about how to scale your company and also how to think about fundraising. So definitely check me out there. I also had a little bit of an offer for your listeners. Right. I was going to say that, if you run an e-commerce store and you are doing at least 10K per month and you want to either, scale your campaigns faster or purchase more inventory, we'd obviously love to help. And in, last month, we ran this super successful campaign where we funded hundreds of store owners. And, we gave them up to 50K of funding, absolutely free. So there was no fee. Normally we charge a 6% fee, but in October we did it for exactly 0. And on our website, you won't find mention of this anymore. It's gone. But I thought, for listeners of your podcast, we wanted to basically make it happen again. So,
Awesome.
all you have to do is reach out to me at asher@weareuncapped.com with the subject line secret 50K and a bit about you to see if you qualify. And, we'd love to be able to fund you and make it happen again.
Brilliant. We're going to put this right at the top of the show notes, this offer. Appreciate it, Asher. Thank you.
Fantastic. Thanks so much, Kunle.
Brilliant to connect. Cheers.